London has long been seen as the global financial center, but given economic, political, and regulatory changes, can it retain its title as the world's top financial marketplace? For many in the financial industry, the answer is yes, but it must navigate some tough political and regulatory challenges from the European Union. Here's a look at London, its challenges and opportunities.
It is a very interesting time in London right now. The way I look at it, there seems to be three forces that are sort of reshaping the landscape. The first, obviously, is regulation, not just MiFID II and EMIR, but also there's a great big truck coming over the hill, driven by Mr. Dodd and Mr. Frank, that's going to smash OTC and exchange-traded derivatives together. We're seeing some increased competition with NLX, CME, entering, but let's not forget also Turquoise and BATS that have aspirations in that area too. And of course the final thing is Europe has not been immune to the lower volumes that we saw everywhere in the world, but particularly in the US.
London still remains a vibrant place to do business, and from a participant perspective, and I think from a regime perspective, is probably the most attractive place in Europe right now.
Its relationship with Europe and indeed with the US, when I say Europe, I mean continental Europe, is, I think, changing, frankly. We've had a significant kind of political will coming from David Cameron, the UK government, on their commitment to Brussels and their commitment to Europe unequivocally, and they're looking to renegotiate some elements of that. And that obviously has some ramifications for the whole financial services industry in London and that relationship with Brussels.
What we're seeing in Europe is quite different to what's happening in the US markets. It's a fairly fragmented market, obviously. There's a lot of derivatives markets. Certainly it's quite fragmented and a lot of different silos. And as we go through this period of regulatory change, we're seeing that evolve even further. So the things like the financial transaction tax are coming in, that's going to affect some of the countries. We've got EMIR, we've got Dodd-Frank. People are sitting there looking at their country of domicile. Obviously, London's not in the euro, and that's that potentially has been picked up in Brussels. And there's a lot of people going down to Brussels, lobbying and making sure they understand sort of where they stand.
London's still coming to terms with the events of 5 years ago. There's a huge amount of discussion amongst both the public and the specialists within the financial community in trying to work out what the right balance is between new regulatory oversight and ensuring a marketplace that still has enough freedom to supply the capital formation and risk management that we require from the markets. The challenge in London is that it's not an island which it is geographically. It's in fact plugged together globally and, more importantly, politically still in Europe. That means that making a decision as to where that balance lies is something that is down to the British government, but equally down to European politicians and regulators.
You've got two drivers going on. You've got the interest in London as a place to be, because you can access global markets and it's a portal into the European Union on the one hand, but then you've also got the regulatory burden that's taking place on the other hand, which is quite intense, and whereas it may not be fully reflected in some of the Asian economies.
It's important for the city that it is cognizant of what's happening in that political agenda and reacts accordingly, right? We're very engaged with the local policymakers in terms of their relationship with the continent. We want to ensure that remains strong. And it's important for the financial services industry.